Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention and other fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking. This is your spectator of the spectacle coming to you live from deep inside the Upside Down. Today's the weekend. It's Saturday today, and here we are looking at a few things. We've got precious metals, gold and silver on the agenda. We're also going to look at which was the best performing asset so far this year. And we also look at the trust quotient, how gold and silver might be able to fit within that arena of trust, which is a limited resource, it appears currently, especially as we go through this difficult economic situation caused by the virus. And it seems that our leaders are managing and manipulating and trying to pretend that everything is as good as it has always been, and perhaps we're on a V-shaped recovery, which I'm not convinced of. We'll also take a look at cryptocurrency, see how well Ethereum is doing, and also some vulnerabilities found in cold storage wallets. So if you have those, you might want to pay attention, see how you can better protect yourself. Then, of course, we'll look at our online oracle, the 8-ball economist, and see what question we have for it today. But first, we take a look at gold in quarter two. Snowball rolling downhill, getting bigger with every spin. Gold runs and silver jumps. Gold's sell-off in March led to a strong rebound through mid-April. You can see here this is the quarter two performance of major asset classes. Crude oil, of course, has done exceptionally well. We would expect as much after it hit negative territories, just very, very briefly. Nasdaq, of course, done well. In this last quarter, silver has been the third best performing asset, and gold, of course, up 12.5%, just about, which is less than half of silver's. So S&P, Dow, of course, you can see it's been doing well. Real estate as well. Now, these ones in the green here, real estate, Dow, S&P, Nasdaq, and crude oil, I can see is doing poorer in the coming year, I would imagine. Perhaps even the coming 18 months to 3 years. I think real estate, the stocks, and crude oil perhaps have been outperforming and at our nosebleed territories. Commodities, I think, could come into their own in the next 18 months to 3 years. We'll have to see how we get out of this depression that we're in. It was a banner quarter for gold. The price ended at its highest quarterly closing price in history, which is good news. Silver was a standout, jumping 28.1% in 3 short months. And you would hope so, because if we look here for the year-to-date performance, gold leads all major asset classes, and silver is down 1%. However, you'll notice that all the classes that have done well in the second quarter of the year are all down, right? So crude oil, commodities, real estate, Dow, S&P 500. Only the Nasdaq has been up here, and the Treasury at 10.6%. And as I said, I believe the Treasury bonds are also in an asset bubble, so there's very little place for me to put my money. I'm struggling to find asset classes where I feel confident in knowing what I'm doing and which might have best performance in the coming 18 months to 3 years as we get that to the bottom of our economic situation and start to pull out of this tailspin. Of course, gold leads all major asset classes is a bit of a misnomer, because we'll take a look at Bitcoin. As you see, it's been the best performer from the beginning of the year. So we'll put it year to date, and we'll see exactly how much it's done. You can see here we are. That's about where it is right now. And you can see that's 26%, just over 26% right here. So really, Bitcoin has done the best of the asset classes. Potentially, there's other cryptocurrencies that have done even better over this past year, but of course, Bitcoin is the granddaddy of them all. It's sort of the bellwether of how the cryptos are doing generally, in my opinion. So silver only down slightly, gold up quite well this year, and cryptocurrency, Bitcoin especially, up fantastically. So good asset classes, and I would argue that gold, silver have better upside potential and Bitcoin than the Nasdaq and the US Treasury, and of course the rest of the stock market. The Fed's unlimited liquidity pledge is not only still in play, but grew last quarter to include the purchase of individual corporate bonds, even junk bonds, as we know. All those fancy methods of quantitative easing have driven an increasing number of investors into gold, as I'm moving into precious metals, not gold so much. It's not something I can afford currently, but I can pick up a coin of silver here and there. And I think people are starting to see that. They're starting to notice, at least perhaps more seasoned investors, that the stocks are quite high. Bond is quite high. Real estate is quite high. So the chances are precious metals still have a lot of room to run. Plus, during times of fear and uncertainty, folks move to precious metals. While yields continue to weaken, the gold price has now risen 3 consecutive months and 6 consecutive quarters. Gold is the ideal fixed income alternative in a low or zero rate world, which is where we are. However, silver is still dirt cheap. Despite silver logging a 28.1% gain last quarter, the GSR, the gold price divided by the silver price, or the gold-silver ratio, remains at nosebleed levels. The previous high, as you can see here, was back in 1991. As you can see, the previous high back here in about 1991, I guess, was 100.8. The modern day low is 14, it's 1980. And this goes back to 1968, and we'd call that the modern day low because practically we got off the gold standard around here. It's 1971. Currently, it's around 99, and it had reached an all-time high of 123.5. So you can see that it's bound to revert to the mean. And just looking at this chart, I would say the mean is somewhere around 40 to 50, I would think. Perhaps if you take it from the high points here, perhaps even 60-ish. Still, there's a lot of potential there for silver, in my opinion. The ratio ended the quarter at 99.08. Silver still offers deep value. With all the records gold set last quarter, is the price getting a little frothy? The answer to that question lies in the answer to this one. Are the risks that drew investors into gold all gone? See what conclusion you draw as you review the following list. They talk about the coronavirus second wave. It's probably still to come. We're currently in the first wave. Unemployment continues to be high. Recession, we're in a recession. I see no reason for this to end, and perhaps we're heading into a depression, as I believe. Monetary and fiscal stimulus, that's going to continue happening. Public debt is growing. Vulnerable stock markets, I'd argue they're very vulnerable at the nosebleed heights they are already, the valuations. Real interest rates are at zero practically, might even go negative. That's going to help gold. US-China trade deal, that continues to be a bit of a bear. Commercial real estate, presidential elections, physical demand. So there's a lot of reasons why gold and silver especially will continue to do well. Another interesting article, Monday morning, the trust quotient, gold and Bitcoin versus the Fed. At the time of writing, there is no crash in sight, of course. The S&P closed up 0.45%. The Australian index also up. So what does it mean? It means the concerted monetary gymnastics of central banks around the world are kind of doing the trick. US certainly defied expectations with the latest job numbers, adding a record of 4.8 million jobs, which I think is manipulated numbers, as we've discussed. Sparring between Joe Biden and Donald Trump ensued. The real story is what's happening at the heart of the monetary system. The spend on stimulus dwarfs what was deployed during the great financial crisis. Negative rates are off the table for now, apparently, but we'll see about that. Read that they're definitely on the table if things head further south. Exactly. This is the gold price here, as you can see. Gold has done quite well. About here is when we came off the gold standard. I would think somewhere around here. There's reached the all-time high. We're up there again almost. I think we're currently coming up on 18 or so. So it's only been a couple of times in history where gold has been higher than that. So to make of this, is this a representation of how many people don't trust the new iteration of the global financial system as of 1971? All this fiat currency, this manipulation, quantitative easing, and I would think it is so. And as they say here, I believe so as well. There is no other asset class which thrives in a low trust environment except for cryptocurrency and Bitcoin. They remain the favored vehicle for bets on a bankless future, maybe even a central bankless future. That would be ideal. I think the central banks are the ones causing the problems for us currently. And here we can have a look at two technologies, two exit strategies. Let's take a look at how gold and both Bitcoin have performed since the March low. You can see here, I want to say that the gold is in gold, of course. You can see it's been up. There was the March low that gold hit. It didn't go as deep as Bitcoin. The Bitcoin, I believe, is in red here. You can see it's bounced up in positive territory for the year currently. And then, of course, I believe this is the S&P 500, the blue one, which is currently where we are, sort of starting to trend sideways. I think there's probably another leg down, probably another long leg down. As you can see, Bitcoin took a harder plunge from the February peak to the March trough. It also bounced back stronger against the SPY while gold kept chugging along. Now, this is gold in US dollar terms and Bitcoin in US dollar terms. The US dollar index spiked in March as well as everyone scrambled for greenbacks, and perhaps that's why these highs don't look as good as they are, because as we saw here, Bitcoin is up for the year at about 26%, right? The main point is that Bitcoin and gold are outstripping the stocks. Then he concludes here with Simmel said it best, and you can read that for yourself if you like, but just as we are due for a reckoning between economies and markets, we are due for a reckoning between institutions and the money they create. Simply put, if you create more of it, suddenly it means less. That's just simple supply and demand, folks. Okay, good news about Ethereum. Ethereum was behind 85% of dApp's $12 billion volume in Q2 2020. dApps are decentralized applications. The total transaction volumes of decentralized applications in the cryptocurrency space hit 12 billion in the second quarter of this year, rising by 4.5 billion compared to the first quarter. Ethereum dApps accounted for 85% of that volume. So the Ethereum blockchain is doing very well in the DeFi space, obviously. It's the clear leader here. There are more than 70,000 active wallets across 13 different blockchains interacting with the cryptocurrency space. The top blockchains also include the EOS and Tron. Ethereum's large transaction volume was partly fueled by Compound and the launch of the Comp token, which led to a yield farming trend in which users were interacting with the protocol as much as possible to receive Comp tokens. Compound saw 1.2 billion move through it. The yield farming trend saw Ethereum gas prices and transaction fees increase, which according to the report did not stop Ethereum dApps from thriving in general, so that's good news. So far this year, 1.9 billion have been transacted on decentralized applications using the EOS blockchain, thanks to two dApps, Crypto Dynasty and Upland. So there you have it, folks. EOS and Tron looking as if they're doing relatively well. However, as you know, I'm not in those cryptocurrencies. In fact, I'm trying to pare mine down just to the top three currently. I'm just focusing on Bitcoin, Ethereum, and Ripple. It's, for me, too challenging to figure out which will be the new tokens and the new coins that will do exceptionally well. And so I like to focus mainly on the backbone and the early leaders, and hopefully they'll continue to improve. I'm sure they will. So 1.9 billion in the EOS blockchain, which is pretty good. But compare that to 12 billion total, and of which Ethereum dApps accounted for 85% of that. So that's like 10.2 billion. So good news for cryptocurrencies, especially the major ones, and the Ethereum blockchain still doing well for DeFi and the dApps generally. So that's good news. Now a little bit of troubling news, but of course this is to be expected in new asset classes and technologies generally. Vulnerability found popular crypto wallets like Ledger and others. Mobile crypto wallet startup Zengo recently discovered a vulnerability in some popular crypto wallets, including Edge, Bread, and Ledger. And this is how it works. They utilize a feature in the Bitcoin protocol called Replace by Fee. This feature allows users to send some Bitcoins with a low transaction fee. And you might have seen this on your own wallet. You can choose the different amount of fees that you would like to pay. And depending on the fee you choose, depends on how fast your transaction is completed and added to the next block. So the feature allows users to send some Bitcoins for the low transaction fee. They could also send the same transaction with a higher transaction fee. And then what happens is the original transaction is then cancelled and the new one replaced it. The new transaction is processed more quickly because of a higher transaction fee. And so you cancel in the first one and you can manipulate the transactions slightly that way, or at least who gets what. Some crypto wallets may take unconfirmed transactions into account very quickly, because of which it may appear that a user has received Bitcoin. So for example, you start off sending Bitcoins with a low transaction fee. So some crypto wallets may take unconfirmed transactions into account very quickly, because of which it may appear that a user has received Bitcoin, and then they haven't. In reality, they have not received anything. The sender may cancel that slow transaction or the low fee transaction and replace that transaction with another one at a wallet they control. As a result of this, the balance in user accounts still remains even though the amount is never credited. So as I understand it, it's a vulnerability whereby you can send a transaction at a low fee, so it takes time, and then some wallets will receive that transaction as if it's actually happened already. And in the meantime, you can cancel it and then send that coins back to your own wallet if you wanted, and that person thinks they've received the Bitcoin when in fact they haven't, and perhaps you've received the goods that you paid for those coins potentially. I'm sure that they're going to be fixing this. Zengo discovered the vulnerability in Bread, Ledger, and Edge about 90 days ago. Both Bread and Ledger have handed over bug bounty rewards to the startup. Bread has released a fix while Edge and Ledger are working on a fix, so it'll probably be fixed soon. But this is something to be concerned about, something to be aware of at least with cryptocurrencies, that there are vulnerabilities in them. And with new technologies, there are bound to be vulnerabilities found. In technology just generally, there's often bugs. We're human after all, make mistakes. So something to be aware of. Even though you have a cold wallet. Not necessarily is it bulletproof, although it is probably the most secure. All right, let's take a look at the cryptocurrency market. Here was where we are. Things holding roughly steady. Bitcoin down a bit at about 9 grand. Ethereum at about 225. XRP at about 17, sort of holding steady. And then I have a little bit of Stellar. Stellar still at 14, at about 6 cents, gone up a bit. But there you have it, folks. That's the market cap. And now onto the original, the online oracle, the 8-ball economist. So the question I have for the online oracle today is, will silver outperform gold to the end of 2021? As you'll see, we recall in the first article here that in the second quarter, silver greatly outperformed gold. But in fact, that's arguably the reason for it making up from lost time from the beginning of the year, where it was down slightly and gold has been up quite tremendously. So my question for the 8-ball economist is, will silver outperform gold to the end of 2021? My reply is no. Interesting. Maybe it'll take a little longer than that. I will, however, disagree with the online oracle on this one. I think silver will outperform gold by the end of 2021. Perhaps that's what I should have asked specifically. But there you have it, folks. Thanks so much for joining me. I appreciate you. Remember, stay healthy out there. The virus is still kicking around. And, maintain your good personal hygiene, good personal space, distance, masks if you can. And in the meantime, so pay down some debt. Try and squirrel some nuts away, have some savings, put aside some oil for the lamp for these coming dark days as the storms gather on the horizon. And remember, take care of each other, be kind. That's a currency that is in abundance, even though we pretend and act as if it's stingy in supply, and it's not. Thanks so much for joining me again. Appreciate your comments down below. And remember, dum spiro, sparrow.